Okay, hello everyone. My name is Marie. I'm content lead for Energy and Commodities at Commodities People, and I'm very pleased to welcome you to the third and final session of Energy Trading Digitalization Online, ETD Online. So after discussing yesterday challenges around the digital journey, ETRM systems, we are tackling today another massive topic, artificial intelligence. So how is it used in energy trading? How can it help the decision-making process? What sort of setup you need to have in place to deploy AI in your company? So this is what we will discuss now with our group of experts, Serge, André, and Greg. Welcome. Very pleased to have you on this one. Could you please tell us a bit more about yourselves? Let's start with you, Serge.
Hello, everyone. So my name is Serge Rigori. I'm the CEO and co-founder of Predictive Layers. We started I co-founded a couple of years ago. At the Predictive Layer, we are developing an artificial intelligence software for time series forecasting that we apply mainly to the energy market. So today we're working, I would say, with the whole value chain, major consumers, producers, distributors, traders, and we help them maximizing the value of their assets.
Okay, brilliant. Thank you, Serge. André?
Yes, hello. My name is André. Joined EnAppSys 1.5 years ago. I'm the head of analytics. Within EnAppSys, we have a data platform with all kind of fundamental data from the electricity market in Europe. And with my team, we add all kinds of extra insights based on forecasting. So we forecast on short-term demand, solar, wind, but also prices. And we also do those prices on the longer term. Yeah, so that's me.
Okay, thank you, André. And finally, Greg.
Hi everyone, I'm Greg. I work at Energia, which is Ireland's leading energy supplier. And as a data scientist, my main area of focus is developing machine learning algorithms for predictive market analytics and trading. And in addition, I've been doing PhD research in explainable artificial intelligence.
Okay, good. So I can see that we have the right people on this discussion. I'm very pleased again to have you here. So I invite our viewers to actually post their questions to the panel in the Q&A box. We will get to them at one point in the conversation. So AI is one of the tech buzzwords and has been for quite some time now, actually. How can the momentum be sustained, in your opinion? And I'd like to ask that question to André first.
Yeah, so I think it can be sustained, especially in the electricity world. We get more and more data, and with more and more parties entering the electricity world, smaller parties, there will be more data available. So of course, artificial intelligence is about data and making, in the end, yeah, to make it such that you can help it in decision support in the trading. So yeah, that momentum will be sustained because yeah, we will need this data as well in the future.
Okay, anything to add on that, Serge?
Yeah, sure. And to go back to what André said, from my perspective, basically it needs to deliver on its promises. That's to say, it needs to create real value. That's to say, bring real value to traders or to the whole value chain. That's to say, helping people to make better decisions, getting out of the technology sandbox to the real world, to have real business applications. And I guess that's what we're going to show to the audience with the coming questions, that the three of us have real cases where we can create real value for our customers.
Yes, absolutely. Anything to add on that, Greg?
Yeah, to be honest with you, I agree with the gentleman who said that one of the most important things is finding value and then having access to the right quality data, because I think AI can be highly beneficial to companies. But the main challenge for companies who are new to AI is finding practical applications. So adding new values as opposed to just applying AI for the sake of innovation and having a clear idea in mind and finding the right talent with the relevant knowledge and experience. And I think one way to overcome these barriers is by collaborating with local universities, for example. because it gives companies access to the local talent pool, and it also allows them to utilize academic research and come up with innovative products.
Yes, and I'm sure we will come back to that a bit later on. And I really feel like we hear everything and its opposite, you know, around AI, and everyone has an opinion on it, obviously. What are the sort of myths you want to deconstruct today with us? And I'd like to hear your thoughts, Greg, on that first.
Yeah, this is a very interesting question. And one of the most common misconceptions about artificial intelligence in general is that it's a super intelligent form of machine that can solve almost all kinds of problems. In reality, however, AI is based on mathematics and statistics. And a lot of these methods have been used for over half a century now. But the technological advancements in AI we've made over the last 20, 30 years made this technology more accessible and cheaper. And therefore, we no longer need more expensive, really expensive server farms to train machine learning models and solve very complex business problems.
Yes, that's very true. Serge, what are your views on that?
So I think it's not a magic box, you know. I think you as a manager, as a human being, we still need to think. So I'm sorry, guys. It's not because we talk about AI, but we still have to think. And the other, often I say garbage in, garbage out. That's to say there is no magic. I think to get results, you need to think about the problem you want to solve. You think about the question you want to ask the data, the way you're going to use the answers. So you need to inject business knowledge and human intelligence. It's not a magic box.
Yes, very true. Very true. André, anything to add on that before we move to the next one?
No, that's indeed very true that a lot of models already exist for a long time. And that market knowledge is still very important to select the features that you need to create a model. And I think maybe as well, artificial intelligence in electricity market could be different than other applications in other industries. I think we have to realize in the electricity market as well that a lot of data is very structured, available. So we have to deal with a lot of time series analysis. Most of our data are time series. And yeah, that means as well that indeed those models that have been there for a long time, like just the simple ARMA or ARIMA models or the econometric models, are often still very valuable in this market. And of course, more and more maybe neural networks are applied, although as well neural networks also already exist for a long time. So yeah, indeed, I think the myth, it doesn't solve every problem. You still need to model, and you still need to have, to think carefully with what you do.
Yeah, it's not a magic wand. Picking up on the time series you mentioned, you know, obviously AI is a lot about, you know, using the past to predict the future, right? So given the current turmoil, is that still making sense to work this way? And I know, Serge, you have you feel strongly about that. So why don't you give us your opinion?
Because it's I meet many customers, and it's often a question I get, and you know it's a good question. So basically, you can look at AI specifically applied to time series, and forecast the way to forecast the past, forecast the future by looking at the past. So when doing so, we need to make sure that we might not always have to look too far in the past, because you know the dynamics are changing all the time. We also have to make sure that the modeling we use can detect and learn very quickly new patterns. But for me, last but not least, you know, there are cases where situations are not predictable, and that's where maybe you need to invest the most. That's to know where not to use something. That's also valuable, and that's where we put a lot of research effort at PL, because it's important. You know, people tend to build a model and to use it. In our case, okay, we build a model and we use it, but we like to know when to use the model and when not to use the model.
That makes a lot of sense. I can see you nodding, Greg. Do you want to add on that?
Yeah, this is very interesting view from Serge. And one thing that I want to emphasize is that precisely predicting the future is virtually impossible. And I think the current market environment can be widely unpredictable sometimes, especially in the current scenarios. But that doesn't mean that AI cannot help to navigate through uncertainty. And the way I see this is we can come up with different hypotheses about the effects of factors that we think have a significant influence on the market. And AI can help us validate these theories through backtesting, so we can prepare for different scenarios on the market. So it's not necessarily about predicting the future or a particular event, but it's rather having a plan in place for the different scenarios.
Yes, that makes a lot of sense to me. The next question, I guess, is more for André. Do you think there is enough investment in AI from trading companies? Do you think this is the AI is in focus enough?
Yeah, well, I think so. I've worked on a trade floor, well, from 2005 onwards. And at those days was just a lot of arbitrage possible. So the traders didn't really need models, a lot of data. And throughout all the years, we have seen that the market became much more complicated. Already maybe, for example, due to interconnectors. That's not a local market, but a more interconnected market. And so it became more and more obvious that just looking a bit at the market, that just being bullish or bearish was not the way of making money. So you have seen already throughout the years that on the trade floor, more and more quants, data scientists, were working on those trade floors, and as well traders itself. More and more they are quants with a quantitative background, and then you have seen before. As well, of course, what you also see these days is a lot of algorithmic trading, where artificial intelligence and tools are very necessary.
Yeah. And in the cases where people are not engaging in AI, what do you think is stopping them? Where is the resistance coming from? Perhaps Serge, you can give us your opinion on that?
Sure. I would say that you have to make sure that your AI is not a black box. So at PL, for instance, we have invested a lot on explainability of our forecast. So as such, I would say we do not face so much resistance, because what we deliver is something that our customers, human people, can understand. So and as Greg was saying earlier, explainability for me is the key. You need to understand, even if you do systemic trading, before pressing the start button, you need to understand the statistical edge somehow that you bring. And without that, you get resistance.
Of course. Anything you want to add on that, André?
Yeah, I think already Gregory said it as well. We have to realize that just giving the exact point forecast is not possible, or hardly possible. So it's all about understanding the fundamentals before taking positions. So you need to think about what drives a model if you forecast, for example, the day ahead price. What's the wind forecast? What's the solar forecast? The demand forecast? Are they bullish, bearish? What's the commodity price driving it? And then in the end, you have your point forecast, but you also need to know where the risks are. So these days, of course, we see very high spikes and potential spikes in France, GB. And just pointing those exact forecasts or pointing those exact levels is very difficult. But if you know the possibility of the risk, if it's up or down, then you can take your position. And this especially, of course, for the longer term day ahead, etc., which is less obvious for the intraday market, and the spikes are maybe less apparent. But yeah, you need to, well, still think about the results.
Mm-hmm. Yeah, we'll come back to the whole explainability thing because I think it's really, really important. We'll come back to that in a minute. But before we do that, let's get a bit more practical and see, where is AI best used in energy trading? Could you give us examples? And I think on that, Greg can start with giving us a bit of an idea where you guys used it and developed it.
Certainly. So I think AI can be used in areas where we have to analyze a huge amount of data in a relatively short period of time, and you rely on this data to make more informed and more accurate decisions. One example, for example, is market analytics, where you have to understand the historical impacts of certain things. For example, fuel prices like gas and oil, and you have to apply predictive analytics using demand and weather forecast, or even factors like news and sentiment analysis. For us humans, this kind of calculations would take a tremendous amount of time, but AI can easily deal with this in minutes or hours, allowing you to make the final decisions. And I think the real power of AI comes from the fact that it can make calculations very, very quickly, and it can analyze and uncover patterns in a short period of time.
Yeah. Serge, can you perhaps shed some light on what you hear from your clients, where they need it?
I will maybe repeat what has been said before. We have customers using AI for day-ahead price forecasting, arbitrage on the intraday market, other kind of arbitrage when we work with consumers. They use it for optimizing their hedging strategy, things like that. So there are many different applications, whether we're on the physical market or on the derivative market. But so that's the kind of use cases we have.
Yes, André, on your side, anything you'd like to share on that?
I was just thinking where it can't be used in the energy.
It can't. Okay.
Where it can't be used, but I think you see the usage everywhere. You see it already at the producers' side and more on the technical stuff, to detect anomalies. You see it really in the portfolio management, really from high level down to customer level, how they are performing. And of course, on the trading, you see it a lot with all kind of decision-making processes, analyzing the data and make it available for the traders.
Of course. What are the tools at hand? What works for each case? Perhaps, Greg, you can venture an answer on that.
Yeah, I think this is a very important topic. There is a wide range of tools available for data analysts and data scientists, including quite a lot of open source solutions, software packages like Anaconda, for example, are. And most machine learning models are publicly available, but there are more advanced cloud solutions on the market, like, for example, AWS and Microsoft Azure. But more importantly, you have to make sure that you have the right infrastructure in place and have access to the right quality data and the right quantity as well. So these kind of fundamental data pipelines, for example, allow you to utilize AI more effectively. And therefore, I think even if you use more advanced solutions, if you do not have the foundations right, you do not have the right amount and quality of data, for example, you do not have the right infrastructure, you can use advanced technologies, but you will not get the results you would expect from AI. So it's important to have the fundamentals right.
Yes, that's a very good point. That actually brings us back to the conversation we had yesterday around data management and data infrastructure and things like that. Yeah. I see you nodding, André. Do you want to add something on that?
Yes, of course. At EnAppSys, we offer one of the solutions. We have the data platform available where you can download a lot of fundamental data which can be used in models via an API. And if you look at the machine learning cycle where market knowledge is important and cleaning data is important and structuring data is important, well, we offer that part of the machine learning cycle. If you have the data available, it's very good to see that indeed there are a lot of tools available these days, like indeed R, but also Python. It's a tool that we use a lot ourselves for forecasting. Yeah. It's easy to use, and a lot of libraries are available to create models, and are available for more and more people. So if you follow a machine learning cycle, these days more and more people are capable of making a forecast, and that's so nice about artificial intelligence, where it is these days.
Yeah, of course. Okay, as promised, we're coming back to the whole explainability, making decision process, involvement of AI. And I'd like to address the question to Serge first. How can AI fit into the whole decision-making process? And that ties in also with another question that's, what needs to be in place to give confidence in the tools that you use? That's a big question, so take your time.
We already talked a bit about the decision-making process. So from my perspective at PR, Predictive Layer, we invested, as I said, a lot on explainability because personally, as a human being, to make a decision, I need to understand. So I cannot have a computer just telling me to do that or to do that. I need to understand the drivers. I need to understand the market drivers. And if we go back to energy trading, I need to understand the statistical fundamentals, the unbiased statistical fundamentals that the algorithm is able to give me. And then on top of that, then I can add my own perception that will be biased, or that will be maybe more real-time or more sentiment analysis. But for us, the key is the explainability of the statistical drivers you are finding with your solution.
Yes. Greg, do you want to add on that?
Yeah, so first of all, to talk a little bit about the decision-making progress and how AI can fit into that. Well, I think AI can analyze a huge amount of data, as we discussed earlier, in a relatively short period of time, and has the ability to find previously unseen patterns. And this makes data analytics a crucial part of decision-making, because if you think about this, you can make predictions, but then another part of the equation is really how you communicate these findings to senior stakeholders or decision makers. And one of the most important thing from this communication perspective is how you visualize and how you analyze the data that you have at hand, and how you extract useful information from the data that's been predicted by the AI models. So it's very important to have the data analytics pipeline in place, and then data visualization as well, to communicate all these findings to senior stakeholders, so that they can make more informed, more accurate decisions. You can turn these into insights. And in relation to the confidence part, I think it's really important to highlight that a lot of the machine learning algorithms out there are not interpretable by design, and therefore we still consider them black box models, because we don't know exactly why these algorithms make certain predictions. But in order to see widespread adoption of AI in market analytics and trading in general, so we have to understand the rationale behind these predictions. So one of the most recent research area in artificial intelligence is explainable AI, which allows us to understand the importance of the different data points in the decision-making process, and build trustworthy models, and revealing through the process of explainable AI the the thought process of these different models. And it really helps us to understand not only artificial intelligence itself better, but the market better as well.
Of course. André, do you want to add anything?
Yeah, I think it's important to know what your inputs are, that they are clearly visible, because then you can understand why models can give a certain output. Another thing is that is very important is that models keep on running. A model that fails in running, it's not so reliable, I would say. But then, I know that it's one of the important things.
Okay. All right. Well, now, I mean, I know you guys touched on that to some extent around the whole sort of human input and what you need to have in your teams to run AI. You know, when you look at development capabilities, precisely what sort of human investment do you need? What profiles do you need in-house, you know, to manage AI? Because, well, generally speaking, the sort of setup can be quite varied, right? It could be completely outsourced. It could be done completely internally. It could be a mixture of both. So what are your takes on that? And perhaps I'll go to Serge on that first.
Oh, sure. So in our case, you know, as a software editor, basically, we need to have some business knowledge, as I said earlier, garbage in, garbage out. So we need to understand. So we have business knowledge on the energy market. We need to have ML experts, obviously, IT, ops, and so forth. And what we bring to our customers, I would say, is a software tool and expertise. So we can help them bootstrap their ML team when they build one. And in some cases, we just bring them models. So that's a different approach, I would say. In this case, we more working with their trading team, and again, explainability there is key.
And is it important for you that on their end there is a big understanding about AI in general, like, you know, having perhaps some quants and, you know, people that are familiar with it, let's say, that make a difference?
Well, generally, you know, they are pretty strong in mathematics, so they grasp the concept very quickly. At least the people we're talking to, because as we said earlier, you know, there's not that much new. You know, it's mathematics. It's just that we have unlimited processing power, but we have to be careful. We have to make sure that the computing time is still lower than the value we create. Otherwise, there is a fundamental business problem. But that's but otherwise, no, they're pretty smart.
Okay, good. André, your take on that?
Yes. So if I look at EnAppSys, first of all, we have the whole database with all the data. So there's a whole software team managing the database, software engineers, data analysts. And then if I look at my own team, where we create models, typically we need, first of all, market expertise. Again, if you want to build a model, you need to know what you're building and what you use. And then to create a model that keeps on running 24/7, you need to program a very good pipeline. In that sense, we use data scientists. But if it comes really to modeling and really in-depth modeling, you also need quantitative knowledge. And those are the most important roles
profiles
we foresee in our company.
Okay, and now from the perspective of an energy company, Greg, what are the new profiles you see? What you like to recruit at the moment, basically?
Yeah, let me be a little bit vague here, because I think it really depends, first of all, on the area, and then where exactly you are in your journey in relation to applying artificial intelligence. But André raised a very interesting point about this, and I think market expertise is probably one of the most important things. Probably one of the most challenging as well to find talent with market expertise as well, purely because a lot of the artificial models are used in other very popular areas like object detection, computer vision, and self-driving cars, for example. So a lot of people are attracted by these companies who apply artificial intelligence on a more advanced level. Generally, I would say, apart from having a strong understanding of the market, a strong mathematical background is probably a must, both from a data science and data analytics perspective. But having a strong understanding of the data pipeline, for example, for data engineers is also very, very important.
Yeah, well, business knowledge and market knowledge is still at the heart of everything, right? At this stage. Okay, I've seen some questions coming in, so we'll take a few now. So please do volunteer if you want to answer them. So we have a first one from Paresh. Why is AI a topic in trading, as predictive analysis using models of data is machine learning only? So who wants to take that one?
Let me give you some insight in relation to why artificial intelligence is used in trading. One of the difficulties in energy trading in general is the huge amount of data you have to deal with on a daily basis. And predictive analytics is not only machine learning. You can analyze the data using different tools, for example, Excel, and you can have analysts who go through these massive amount of data on a daily basis. But in order to save time and focus on more high value tasks, you have to use machine learning, or it's strongly advised that you use machine learning in order to analyze the vast amount of data you have out there and then find correlations. Because unfortunately, humans can be inaccurate at times when it comes to these manual touch points. So AI is in general more accurate and a lot quicker than humans.
Okay, all right. The next one I see. Well, we have a few more ones. Okay, so who has the responsibility for the mistakes if an AI algo makes one, I guess? The whole trading floor or the trader who relied on the tool information? Yeah, I guess the regulatory compliance side of things is quite interesting. Who wants to take that one? André?
I think it's the trader that would be responsible, because probably it's his name under which the trades are done. But of course, it depends on the whole structure and contracts and agreements that have been made from an HR perspective. I also know that quants could also be P&L responsible. I think in general, it would be good that it's the whole team that is responsible. But yeah, there should be someone responsible for monitoring the trades that are done in the market. And I think that is the trader in the end.
Okay, no, this is interesting. I was hearing, compliance officers being, quite reluctant into engaging in algo trading because of the repercussions, precisely for the rest of the company. So yeah, this is definitely an interesting topic.
So I can add something, in our case,
yes.
In some customers, we're delivering ready-to-use signals, I would say. So we like what they call a technical operators. And in some cases, depending on the topic, we take part of we have a profit sharing business model that can cover losses. Obviously, we kept that. So there are many conditions, but that's a business model we have with some of our customers. Well, when you trust your model, you You commit?
Indeed. Thanks for that, Serge. Okay, let's go to another one. So from that comes from Michael. From a data input and clerical replacement perspective, how do we see the market moving away from offshoring input-heavy clerical work and transitioning towards OCR/AI as tools come to market and evolve? Are there any impediments to that transition? Any volunteer? Okay. André, perhaps you want to venture an answer?
Trying to get...
Well, if I mean, I encourage Michael to get in touch directly with the panelists afterwards, perhaps, to discuss it in more details and to perhaps clarify if the question was
exactly. I need some clarification. Yeah.
Okay, that's fine. So yeah, Michael, get in touch with André and others. Given models are inherently not deterministic, yes, what advantages are gained from proprietary models over open source models? Should all effort be on getting clean data? About that, yeah. I think I have the answer there that you will give, but yeah, let's hear it.
Yeah, so I think, yeah, it's definitely an interesting question. Should all effort be on getting clean data? My answer is probably yes. One of the most important things in predictive analytics is the quality of your data. So putting more emphasis on clean data is super important. That's not to say that all effort should be on clean data. In relation to using proprietary models over open source models. Now, the advantage of using your proprietary model is that it's fully customized to solve very, very specific business problems. Although most of the solutions you can find are publicly available. So most of the AI models are publicly available, and then you can customize them to your needs. So I wouldn't necessarily say that having a full model that's built from start to finish by yourself is necessarily better than open source solutions. What I would say is customizing the solution and using clean data is probably the most important thing. But again, the clean data is, I would say, probably 60–70% of the effort that goes into predictive analytics.
Okay,
thanks for that, Greg. Sorry, Serge.
Yeah, I will add something, so I'm not the technical guy of the company, but what I've heard in the team is that the data, they like when the data is not too clean, because somehow it's a way to improve the robustness of what we do. So sometimes when it's too clean, what I've heard, but I'm not in the technical team, what I heard is that sometimes they like adding noises to the data or taking the data as it is. So but again, maybe where I join Greg in the analysis, you need to be aware of what you're doing somehow and why you're doing it. And for the what is an open source model, in our case, we have developed some what we consider proprietary models that at the end, right at the bottom, they use well-known ML libraries, but all the, I would say, the data transformation, the feature engineering and the feature selection is based on proprietary algorithms. So,
okay, thanks. Another one. Do you ever use models whose theory rests on information geometry? Greg, no, you were saying no. Okay.
I can say maybe, but I'm not, as I said earlier, I'm not the expert. I need to check.
No, the thing is that I think in electricity world is that I wouldn't exclude any models. I did a quantitative study in the past, and I used a lot of models which I've learned over there. So I wouldn't say no, but I haven't applied it myself.
Okay. All right, well, we have loads of questions coming in. So let's get going. For relatively complex modeling like weather prediction, is the general trend to build these in-house or to use external data services? How are the external data services evaluated, in your opinion?
Yeah, so I can answer that one.
Sure.
I think there are a lot of companies these days that provide weather services. The well-known companies, but also new companies from university that just try to do a bit different or on a smaller cluster. I know, for example, one item that I used weather data myself and saw that it was completely off. So where I'm located, there was a CCGT power plant, and that we used weather data, temperature data to forecast the maximum output, because at CCGT is depending a lot on the air temperature. And we realized that when it was above 30 degrees, that the forecast was off. When discussing it with the weather provider, we realized that they forecasted the weather on a meteor station, and that was just 10 meters inside of the water instead of on the mainland. Well, that's just an example of realization versus practice, where you should go back to such a vendor. But yeah, that's always depending on the goal you have with it.
Of course. Okay, thanks for that. What's your view on building a fundamental model that tries to model the whole energy system to predict prices versus using AI for the same task? Do you think the fundamental model is an outdated form of modeling for a trading floor? No. You don't. Okay.
No, it's yeah, sorry. It's something that I'm also working on myself right now.
Okay.
And if you do fundamental modeling, you can't ignore installed capacities that will be there in the future. So what we will see is a tremendous growth of solar capacity, wind capacity, which is not apparent in the information set in the history. So you can, based on historical relationships and with prices and generation, you can use that to forecast, but you need to take into account different capacities in the future.
In our case, I would just add something, is that diversity is good, I would say. So diversity is a way to reduce your volatility. So I would say in this case, the more, and not the more the less. So for us, it's always interesting to have other models. Yeah.
Okay, and then the last one on the Q&A box, and I think, well, it is something we touched on earlier on with you, Serge, but how to handle the impact of gas price increase due to the war in Ukraine in our models or other black swan events.
I would say in our case, we have a notion of a health indicator. That's to say, whenever we use something, there is a kind of, to put it simply, a distance between the data that was used for learning and the data we use for scoring. And somehow, so far, touch wood, this distance help us avoid some complex situations so far. So, I have to be very careful.
Okay. Greg, you wanted to add something on that?
Yeah, so how do you handle the impact of gas price implement gas price in your predictive models? And how do you measure the impact of gas price? For these kind of things, I typically use correlation just to understand how exactly it impacts prices or any other factors on the market. So build it into your models and see how it affects things.
Okay.
Maybe one technical thing is that if you look at gas price over the last 3 years, it's very interesting, because if you think about what we said earlier, looking at the past to predict the future, can think that if you stationarize the signal, you cannot make you cannot extract anything out of it. So you have to find you have to be creative in the way you use such a signal to stationarize it, and yet keeping information out of it.
Okay, thank you, Serge. There's one last question in the Q&A box. And we already past the time. So let's have a very, very short answer for that one. So the question is, do you think trading companies have enough tech maturity and data culture to handle such complex processes as machine learning or AI?
Definitely.
Okay. That was a very brief answer, and I love it. All right. Well, thanks a lot for sharing your views, Serge, André, and Greg. It's been very informative, very interesting. Loads of food for thought. We don't have any time left, but I still wanted to really have your thoughts, like a couple of words only, perhaps, to answer this. If we have people in the audience, looking to start their journey with AI, what's the best advice you can give them right now? And perhaps, Greg, you want to go first? Just a few words.
Have a clear goal in mind. Have the expertise, understand the industry, and apply the right algorithms and models.
Great. Serge?
One word or two words? Contact me. No, I'm joking.
Okay, if that's your
you wanted a short answer. I would say you have to. It should not prevent you from thinking. It's not a magic box.
That's a good one. André?
I would say keep it simple.
Good one as well. Okay, well, thanks for that, gentlemen. That's really brilliant. It was, as I said, a pleasure having you on this. Many thanks to our viewers, and many thanks for their questions as well. That was really interesting. Recordings will be available later on this week, so don't hesitate, to share that with your teams if that's been, useful to you. We're currently very busy developing the programs of Energy Trading Week that will happen in September next year. But also, the power forecasting webinar that we're doing in February. So, feel free to get in touch if you're interested at all in getting involved. Sorry. Many thanks again to you all, and see you all very soon. Thanks a lot.
Thank you. Thank you, Marie, for. Thank you. Bye-bye.
Our pleasure. Bye.